Okay, thank you. The June 24th, 2022 Oregon State Lottery Commission meeting is now in session. It's noted for the record that commissioners are attending the meeting via a web meeting. Commissioner Wilcox is excused and a quorum of commissioners is present for today's meeting. Today's meeting is being live streamed on the internet and a link is posted on the Oregon Lottery website. Will the clerk please call the roll?
Commissioner Patel?
Here.
Commissioner Ramirez?
Here.
Chair Safoff?
Here. Elisa, will you please inform the commission of who else is in the meeting?
Yes, we have Director Barry Pack, Janelle Simmons, Josh Lehner with OEA, Kathy Ortega, Matt Shelby, Nate Carter with DOJ, and Ty Calandrello.
Thank you. Members of the public have the opportunity to provide written public comment to the commission for this meeting. I'd like the clerk to confirm that no public comment was received we should be addressing.
That is correct. We did not receive any public comment.
Thank you. With that, let's move to Commissioner Communications. And maybe we'll start with Commissioner Patel on the Audit Committee report and then open it up if any other commissioner has any comment they would like to make.
Yes, thank you. Chair Sathoff and I met with the audit committee prior to this meeting. And one of the things we discussed was we reviewed the enterprise risk management's risk register. There were two new risk items added to the risk register. One was a high risk and one was a medium risk, and both have mitigation and various programs and efforts to mitigate those risks. We did review the cybersecurity CIS critical security controls audit. The objective of this audit was to identify and analyze lottery's control activities deployed to prevent, detect, and manage cyber risks, including IDing of the most significant and impactful cybersecurity risks to the lottery and existing controls in place to mitigate these risks. Overall, the audit team found that the lottery continues to incorporate sound practices and security controls deemed necessary for an organization with the requisite financial resources and established infrastructure through the implementation of various trainings, management, and oversight programs. There were noted areas where recommended improvements could be made, which were accepted by management to be implemented. We also reviewed current engagements and a status update on those. Some are in reporting phase and some are in the fieldwork phases. And I will be reporting out on those at a subsequent commission meeting. The ones that are currently under review are employee recruitment and background check process, IT vendor risk management review, and miscellaneous consulting and advisory engagements. Are there any questions? Thank you.
With that, if there are any other commissioner communications, comments by the other commissioners, this is our time to share those. I will only say I want to thank the commission again and the leadership for what I felt was a very effective, informative work session that we recently engaged in. And so let's move to Executive Director Pack for your report.
Thank you, Chair Sathoff. Commissioners, good morning. Happy sunny Friday. Summer is finally here. I'll start with some lottery news. We were excited this month to support one of our key beneficiaries, Oregon State Parks and Recreation, helping celebrate the annual State Parks Day. This year is special because we're also celebrating 100 years of Oregon State Parks. It all started in 1922 with Sarah Helmick State Park. 100 years later, our state park system is second to none with more than 250 parks, recreation areas, and heritage sites. Thanks to voters, lottery dollars have funded our parks for the past 24 years to the tune of nearly $1 billion. The State Park Centennial gives us the ideal opportunity to remind Oregonians that their lottery play helps keep our parks going strong as they head into the next 100 years. Special limited edition scratchets highlighting Wallowa Lake, Silver Falls, and Smith Rock State Parks provide our players with an even more tangible reminder that when they play, their dollars help support the Oregon places we all love. Also, this month, I was invited to present to the Joint Legislative Committee on State Gambling Regulation to give an overview of lottery history, our current state, and our future considerations. The committee is tasked with reviewing the existing policies and structures that regulate state-sanctioned gambling and take a comprehensive look at the future of the industry in Oregon. Legislators asked thoughtful questions about our games, the risks, and our obligation to deliver revenue for beneficiaries. Additionally, we discussed Oregon's unique lottery bonding program, the projects it funds, and the fiduciary responsibility it places on lottery to remain viable long into the future. The committee will hear from other legal operators in Oregon, as well as in and out-of-state experts in the coming months. As the committee does its work, we'll do our best to support it in any way we can, and we'll keep you posted as the conversation continues. Moving on to sales, as we wrap up our business year, video lottery revenue surpassed $1.2 billion this business year, beating the previous top year by more than 25%. For the current fiscal year, Scratch-Its have generated over $160 million in revenue and are slightly behind current year-to-date forecast. It's about 2.8% below, but sales continue ahead of pre-pandemic levels by 24%. The trend of players purchasing higher price point tickets continues. Over the past several years, the $5 price point generated the most sales, but this business year, the $10 price point will surpass it for the first time. For draw games, high jackpots translate into high sales. Two 600 million plus jackpots this year pushed Powerball revenue ahead of last year by 40%, while Mega Millions sales decreased 28% when compared to last year when we had a $1 billion jackpot. Along with Megabucks, all three games have generated $109 million, which is 7% ahead of last year and meets the forecast. Keno has generated over $109 million this year, an amount not reached since 2007. Over the last 4 weeks, sports betting saw $35.2 million in turnover, leading to more than $3 million of gaming revenue and an 8.7% margin. Basketball and baseball both generated over $11 million each of that turnover. The NBA playoffs ended June 16th, and the close of the NBA season marks the first opportunity to observe DraftKings performance in the absence of the two major sporting markets of NBA and NFL until September, when NFL kicks off. And then moving on to winners. On the evening of May 18th, Kathleen Whitney of Wilsonville was working on her mother's celebration of life as she had recently passed away. Quote, "I had just wrapped up making the invitation when I remembered my Megabucks ticket," Kathleen said. "So I pulled up the lottery's app and scanned the ticket. There are all these Hollywood lights and balloons on the screen. I told my husband, I think I won $5,600, and showed him the screen. He looks at the screen and says, no, you won 5.6 million. I can't but think that my mom was part of us winning." Kathleen chose to take the one-time lump sum option, making her prize $1,904,024 after taxes. She plans to pay some bills, do some home remodeling, and travel. Kathleen bought her Megabucks ticket at the Wilsonville Safeway on Wilsonville Road, and her winning numbers were 1, 3, 18, 20, 31, 34. One bit of lottery advice Kathleen shared, quote, "You can't win if you don't play." Win for life. Top prize winner Larry Meisel of Milwaukee has been diligently playing the same numbers over the past 5 years. The only number he's changed over that time is his age. Having turned 73 this year, Larry replaced the old number with 73, and he's happy he did. The winning numbers drawn were 11, 28, 47, 73. By matching all four numbers, Larry won the Win for Life jackpot of $1,000 a week for life. Win for Life jackpot winners can choose to receive a once-a-year $52,000 prize or $1,000 a week for life. Larry chose the weekly payment option. Larry bought his winning ticket at Morrow's Surview Market on Southeast McLaughlin Boulevard in Milwaukee. And finally, Cynthia Clark of Tye Valley. In a clear case of like mother like daughter, Cynthia joined her mother as a $100,000 lottery game winner. Cynthia's mother got the ball rolling, Powerball that is, in 1992 when she won $100,000 playing Powerball. Fast forward to 2022, and Cynthia joins her mother as a $100,000 prize winner by claiming the stacks of cash scratch its top prize. Being both retired and a grandmother, Cynthia sees spending added quality time vacationing with her grandchildren thanks to her big win. Cynthia bought her winning ticket at Dinty's Market in the Dalles. And that concludes my report for this month.
Thanks, Barry. Questions or comments from the commission? I think we need to make Kathleen's statement our tagline. Can't win if you don't play. With that, let's move to minutes of the previous commission meeting. The minutes of the previous commission meeting and work session have been circulated to the commission in advance of the meeting. If there are no changes to the minutes, is there a motion to approve?
I move that the minutes of the May 20th, 2022 Oregon State Lottery Commission meeting and the June 6th, 2022 Oregon State Lottery Commission work session be approved as final as presented today.
Do I have a second?
I second.
Thank you. Will the clerk please call the roll?
Commissioner Patel,
Aye.
Commissioner Ramirez,
Aye.
Chair Saffoff.
Aye. For the record, the motion is passed. Thank you. Let's have Kathy, Ms. Ortega, walk us through the financial report.
Yes. Good morning, Chair Saffoff, Commissioners, Director Pack. For the record, my name is Kathy Ortega, Chief Financial Officer for the Oregon Lottery. And we're going to go over the financial reports for the period ending May 31st, 2022, which is the second to the last month of our fiscal year. Turning to the monthly operating statement, we have net revenue of $120.5 million on a budget of $118 million, almost $2.5 million favorable to budget. Under game vendor charges, I'm going to categorize this one as a budget whoops. This is originating out of the sports bet contract. And when we put the budget together, we misunderstood what those costs were going to be. And so we did not have a correct budget number in there. This has been fixed going forward into the FY23 budget. And so it just is what it is. We made a mistake when we did the budget for this. You're seeing sales support, public information with negative variances, which is typical of this time of year, where we're starting to get invoices in as we close out the year-end results. Under salaries, benefits, and wages, this is the ongoing story about PERS. We had a PERS accrual in the budget, and based on my report from last month, we are going to have a negative entry for PERS this year. So we are not continuing to put in that accrual. So it's more of the same story on PERS. Net profit of $85.4 million on a budget of $79.7 is $5.6 million favorable to budget. And turning to the year-to-date statement, we have, it's almost hard to say, $1,308 million on a budget of $1,296 or $12,115,000 favorable. Again, the same thing under game vendor charges and salaries, benefits, and wages with the PERS issue, resulting in a net profit of $896.2 million on a budget of $833, almost $834 million, $62.2 million favorable to budget. The two variances that we have on the services and supplies under facilities, there's a slight negative variance in the month under facilities, which is coming from some of the inflationary pressures that we're experiencing, as is the case with fleet expenses on the gas prices. I don't know if anybody could accurately predict what gas prices are going to be at this point, and so we probably will continue to see this sort of variance going forward for the rest of the year and possibly into next year. I have the balance sheet for you today. And that represents my report for this month. I'd be happy to entertain any questions.
Kathy, could you go back to the game vendor charges for just a minute? And it may be too complicated to answer this question. We can take it offline if we need to. Is it that I guess what I'm curious about is that we didn't understand, are we comfortable with the way the contract is set up? So did we just do the calculation wrong, or did we not understand how it worked? Or is that too simplified?
It's a little bit, well, it's actually a little bit of three things. Okay. We're doing very well, so it's making the variance larger. Mm-hmm. We did not understand what we put into game vendor charges when we did the budget, so it goes back a bit. And but I believe that what we are booking is accurate for actuals and per the contract. So does that answer your question?
I think so. I guess what I'm most concerned about, mistakes happen, but what I'm most concerned about is that we understand how the contract works and that we're happy with the model under the contract.
We do now, and it's what is reflected in the FY23 budget. We just didn't, at the time that we did this, we didn't understand it and didn't catch it.
Okay. All right. So other questions before I move to have the financials approved? All right. Is there a motion to approve the financial statements?
I move that the Oregon State Lottery financial statements for the month ended May 31st, 2022 be approved for the record as presented today.
Thank you. Do I have a second?
Second.
Will the clerk call the roll?
Commissioner Patel?
Aye.
Commissioner Ramirez?
Aye.
Chair Sathoff?
Aye. For the record, the motion has passed. With that, let's move to the funds for video lottery terminals and the budget and the contingency reserve increase, if we can. I believe that's you, Director Pack.
Actually, I'm going to ask Kathy Ortega to start walking us through the highlights of the budget, and then I will pick up on the video lottery terminals and the contingency fund.
Great, thank you.
Okay, yes, I'd be happy to do that, Director Pack. So I'm just going to hit a few highlights which were presented to you in a memo that was written to explain the budget. We, on the draft budget for 23, we always use the OEA forecast for our revenues. And so that's what is in the version that has been presented to you today. Commissions and game vendor charges, I believe correctly, represent the contracts for the vendors that we have operating our games, as well as the current retailer contract rates for both contracts for commissions. We have what we expect to see as our ticket expenses based on current contracts. Advertising, game equipment parts and maintenance are up. I guess I should have preceded this conversation by saying that we believe this budget that we're presenting to you today reflects a return to more normal spending pre-COVID. And so when I say something is up, it's because we are comparing it to either the prior year or a prior budget where we were very much restricting our spending in light of the pandemic situation that we found ourselves in. So when I say it's up, yes, it is up when you compare the numbers, but I believe it's a more normal level that reflects what it takes to run some of the campaigns and operate our VLT programs for those two line items on a more normal level. The game equipment parts and maintenance has about 8.1 million in there for game sets to keep the product fresh and attract our players. Same explanation for public information, market research. Those reflect more normal spending levels. Salaries and benefits we've outlined for you in the memo and in previous conversations. A couple of the highlights. It does include base salary and one-time payout increases, and it does also include a $17 million PERS accrual for FY23. We believe it is going to go back up based on market factors on investments, and so we are going to continue to make an accrual next year until we know otherwise what's happening. Services and supplies does reflect return to normal and reinstating some programs that we had canceled under the COVID restrictions, and because we had reduced revenues. It represents investments in some of our technology servers, equipment that supports our operation, as well as laptops. We're returning to a normal replacement cycle on laptops, as opposed to we only replace laptops if they were actually inoperable. We do have $20.7 million in the investment fund, which we discussed in previous meetings and provided you a list of what those programs are. And that is something that we hope to continue into next year based on available resources to do the work. That all ends up with a net profit of $821.7 million. I have also provided a schedule of services and supplies so that you can see where those increases are happening. And as far as our capital investments for this year, it includes the $35 million for continuing to invest in our VLTs. It includes a $1.8 million, I'm going to say it's an investment, but I think it's a more accurate as a replacement. Our roof is beyond end of life and leaking, and we need to do an overlay on that roof with another roof solution to make sure that our environment is sound. We also have $4 million for the building security replacement system, which we think is going to take 2 years to do, but we've included the amount here so that as we progress through that project, we have the money available to spend. I also, as I mentioned earlier, provided a list of all of the projects that are in our investment fund. And with that, I'd be happy to answer any questions that you may have on the budget presented for you today.
Questions or comments from any of the commissioners?
I would just comment, just for the record, that the lack of questions from the commissioners on this topic, which is very complex, is more a function of having spent an entire day with the team and the thoroughness with which they answered our questions on that day. So I just wanted to just kind of make that statement up front.
Thank you, and point well taken. I agree. The team's been very good at providing us with transparency and information we need along the way. And as you say, we spent a day on this. So a great point. I want to also clarify, Kathy, the roof, the amount of the roof, even though we're not quite sure yet of the total cost, the amount you've included, you believe is the 2-year cost, but we're including it in the budget now to make it available to us. And largely because we're not quite sure yet of the cost of that. Is that correct?
On the roof or on the security system?
Oh, I'm sorry, the security system.
Correct. We that project will we thoroughly expect that it's going to extend into the next fiscal year beyond 23.
Mhm.
but we have to develop a project timeline,
Right.
this, and that will dictate when the money is spent. I mean, it would be wonderful if we could get it done in FY23,
Right.
but it probably is going to extend out, and we'll know more when we are able to develop a project timeline.
Okay. Thank you.
And if I may add,
Go ahead.
Chair Satoff,
Sure.
we've hired a firm to come and do a full assessment of the existing security system, so that we have professional guidance on what's best in market to replace it. And this is not just the Salem headquarters, but it's all facilities that lottery owns or leases
Yeah.
across the state. So it's a complex project to sequence. We think that 4 million is probably a generous estimate. It probably will not cost the total of 4 million, but until we have the recommendations, we won't really know the timing and total cost.
I really appreciate that. Actually, it will kind of surprise me if it doesn't cost that. So that will be a pleasant surprise, Barry.
We'll keep you posted.
Yeah. Director Pack, I think, were there other comments that you and your team wanted to provide about the lottery terminal purchases and the contingency reserve, or anything before we take approvals here?
Yes, if I may, Chair Satoff, if there are no other questions for Kathy on the base budget, I wanted to talk about two pieces of follow-up from our work session. The first is on the replacement of video lottery terminals in the market. As we discussed, we are looking at about 80% of our terminals nearing end of life, and we'll be needing to replace them over the next couple of years. We are recommending that the commission set aside $35 million today into the committed for contracts line on our balance sheet, in anticipation of signing contracts with the two principal VLT vendors that supply us in the market, so that we have those funds available for when those contracts get finalized and are able to be signed. That will significantly make a dent into replacing what's in the market, and will get us on track for the plan that we presented to you during the work session. So just for the record, that's the purpose of this request to set aside this 35 million. And I'll pause there for questions and then move to contingency if I can.
Yeah. Questions or comments from the commission? Hearing none, why don't you go forward with the contingency reserve?
Thank you, Chair Shatha. So at our work session on June 6th, I think we had a very robust discussion around the contingency as our emergency reserve, with lessons learned from the COVID-related shutdowns to bars, restaurants, and taverns, and the subsequent loss of video lottery revenue, which provides 90% of our operating revenue. The commission asked whether 100 million was adequate over the past, and I came back to you at the work session with a recommendation to increase it to 125 at a minimum, maybe 150. We had a good discussion on whether those were adequate, what were those numbers based on, and I said to you that I would come back with some additional analysis, which I have provided to you. Kathy Ortega and I took a look at really trying to identify what are true cash operating costs to keep the organization running, and extrapolated that out to 30, 60, and 90-day amounts, taking a look at what that meant and thinking about our experience over the last 2 years. 125 seemed too small. 150 seemed a little generous when we take into account that these funds being held in reserve could otherwise be used for investments or be transferred to the state for our beneficiaries. So I basically took the 90-day number and multiplied it by 2.5 and got to 135 million. And I actually feel pretty comfortable with that as a recommendation for you to consider increasing the contingency cap this morning. And I'm happy to answer questions about that.
All right. Questions or comments from the commission? I just want to reiterate Commissioner Ramirez's point earlier. These are important decisions we're making today. They've been really well vetted. We've had work sessions, we've had previous conversations, and I want to again appreciate the Director Pack and his staff and their willingness and ability to answer any and all of the many questions that the commission has had about these actions, the budget, as well as the VLT purchase and the contingency fund. We have an adoption and 2 approvals to consider. So with that, is there a motion to adopt the fiscal year 23 lottery budget and compensation?
I move that the Oregon State Lottery Commission adopt the lottery's proposed budget for FY23, including the associated compensation increases for the director and assistant director as presented today.
Do I have a second?
Second.
Will the clerk please call the roll?
Commissioner Patel,
Aye.
Commissioner Ramirez,
Aye.
Chair Sathoff.
Aye. For the record, the motion has passed. Is there a motion to approve the request to commit funds for the purchase of video lottery terminals?
I move that the Oregon Lottery set aside $35 million to be committed for the purchase of video lottery terminals as discussed today and anticipated in the proposed fiscal year 23 budget.
Do I have a second?
Second.
Will the clerk call the roll?
Commissioner Patel,
Aye.
Commissioner Ramirez,
Aye.
Chair Sathoff.
Aye. For the record, the motion is passed. And last but not least, is there a motion to approve an increase to the contingency reserve?
I move that the Oregon Lottery Commission approve an increase to the contingency reserve from 100 million to 135 million to support the FY23 budget as presented and approved today.
Thank you. Do I have a second?
Second.
Will the clerk call the roll?
Commissioner Patel,
Aye.
Commissioner Ramirez,
Aye.
Chair Sathoff.
Aye. For the record, the motion has passed. Thank you. Thanks all of you. With that, let's move to the lottery revenue forecast with Josh Lehner, if he's joined us. I hope. There, yeah, he is.
Morning, everyone. Great to be back with you here. I brought a few slides with me that should be in the meeting materials and just talk about the current state of the economy and how that's feeding through into the current lottery outlook, just as part of an ongoing discussion that we've had in recent years. Right now, we're in this economic boom, this inflationary economic boom, and everything, at least so far, the hard data is all really good, right? Jobs, income, wages, and production, sales, all these things that we care about continue to show really, really strong growth. And yet there's a lot of pessimism about the economy because of the inflation and because of risk to the outlook. That these inflationary booms don't traditionally end well, but everything about this cycle is different. So we shall see how it plays out. But there's some real risk out there, but the underlying data continues to show strong growth. And I thought I'd lead off today just with a quick thoughts on the overall economy is there's things we need to see, right? We know the economy is overheated in certain sectors. We know that underlying growth coming out of the pandemic, the economic recovery being so fast relative to what we've been used to, that's driving a lot of the inflation. There's some things we need to see happen in the economy, and as they're happening, we're starting to see this, right? We're starting to see consumer spending shift back into services, going out to eat more, on vacations, buying a little bit less on the e-commerce type stuff that we're getting delivered to our doors. We're seeing this shift happen, and that should take some of the pressure off of the supply chain, which is a cause of some of the inflationary pressures. We need the housing market to cool. It was overheated. The higher interest rates are certainly zapping the demand out of the ownership market, the existing sales for sure, in the last couple of months, and will continue into the handful of months in the future. We needed the stock market to slow down and the froth to come out of that because it was overheated, and we're seeing these record capitalization realizations. They were up 70% as far as we can tell last year based upon tax returns. That is stimulating the economy when people are cashing out or selling their businesses and things like that. And we need to see a slower labor market gains, right? We put everybody back to work, which is great. That's amazing. It's the fastest recovery we've seen in decades. But those per worker wages are also going up so fast that it's also putting strain on the supply side of the economy, leading to inflation. So we need all of these things to happen to help cool the economy. We would see that on the path to the soft landing, where the economy continues to expand, but the inflationary pressures subside, they come back down. We would also see this on the path to recession. So we're seeing the things that we need to see happen. It's just in real time, it's not feeling very good. And the inflation hasn't slowed yet. The inflation should slow, but it hasn't slowed yet. And so that's the one reason for the pessimism. And then, of course, we're getting some things that we don't need as well. With the Russian invasion of Ukraine is driving energy prices certainly through the roof so far in 2022. And that is a big contributing factor to inflation in the short term. Overall, the bigger picture of inflation has to do with the really strong recovery with not as strong a gains in the supply side of the economy, and underpinning the overall economic outlook and underpinning the state revenues and lottery sales as well has to do with household incomes. Household incomes are continuing to grow faster, and they're at a higher level than we would have thought pre-pandemic. And this is a chart looking at current personal income in Oregon in the dark blue line, total amount of income earned by Oregonians of all stripes and all regions, combined relative to our pre-pandemic forecast, the light blue line. And you can see we had a couple big spikes. Those are the recovery rebates being directly deposited into most Oregonians' checkings and savings accounts. Did a couple points during the pandemic, but overall the ongoing gains are expected to persist, and a lot of it has to do with the strong labor market and the strong wages. But there's other things that have been going on, right? We have a big accumulation of household savings in aggregate, not for every single household, but for the majority of households. Savings is higher today than it was 2.5 years ago. That's starting to be drawn down just a little bit in the last 3 or 4 months. It didn't get drawn down at all in 2021. Here in 2022, probably due to the inflation, it costs more at the pump, it costs more at the grocery store and things like that. We're starting to draw down that excess savings just a little bit, not a lot, but a little bit. And then we have wealth is higher today than it was a couple of years ago. So between current income, accumulated savings, and higher levels of wealth, household balance sheets, the consumer overall is in the best shape we've seen probably in a couple of generations, if not longer, because of some of these changes that have occurred for the bad reason of a global pandemic. But of course, as I was saying, everyone's pessimistic. The inflationary shock, the inflationary bout that we're seeing today is not costless. The reason it's not costless is because our standard of living is declining right now, because inflation is running faster than the wage gains we're seeing, and faster than those income gains that we're experiencing. So we're seeing really good income growth, but inflation, certainly in the last year, is hotter than that, is faster than that. And so our our inflation adjusted income, is declining. It is lower today than it was a year ago. And so that's one reason why people are pessimistic. Ultimately, a risk here would be what economists call demand destruction. When the price of things get too high, we stop buying as much. And if we stop buying as much, well, then firms need to produce less. If they need to produce less, that means they need to employ less workers to produce those fewer units and things like that. And so you can get into this negative reinforcement cycle of a recessionary spiral. We're not there yet, but it's certainly a risk that's out there. And so what is the outlook for inflation? Kind of showed here in the chart two components to inflation. There's a lot of things going on, but if we want to separate it into two things, you have the gray portions of the bars, which is kind of like legitimate supply constraints in the economy tied to reopening, tied to the war in Ukraine, tied to supply chains being overloaded and not broken, but like these sort of like legitimate supply constraints. And it's a big chunk. If you just look at the last year and a half, the gray bars are generally larger than the blue ones. There's a lot of legitimate issues in the economy contributing to inflation due to the really strong demand. And something like, Federal Reserve cannot do anything about that. Raising interest rates cannot tackle these constraints in the economy. But you'll notice that the blue bars are also pretty strong, right? They're running in that 2, 3, 4% range, generally speaking. And this is kind of excess demand, where you have too many dollars chasing too few goods, where you have so much household incomes and financial ability and spending and things like that, that is also contributing to inflation at a higher rate than it has historically, or certainly in the last couple of decades. And that is the part where raising interest rates will start to cool some of those inflationary pressures in the economy. And so we have multiple things going on, of which policy can address some of it, but not all of it. But overall, we are expecting inflation to slow somewhat. The question is, how much will inflation slow in the next 6 months, over the next 12 months, and over the next couple of years? And the big risk ultimately, before we move on, just the lottery risk, right? From this high inflation environment, what is the impact on lottery? And we have a couple different schools of thought here. One would be, we know when the prices of essentials go up tremendously, it crimps people's spending on discretionary items. So when it costs more to take the kids to school, we're in summer now, but like when it takes more to get to work, or run errands on the weekends, or get the kids to summer camps or things like that, you have less money left over to spend on everything else, whether it's getting new clothes or going on vacation or going out to eat or any of that sort of stuff. You have less money after the fact when you have to pay more at the pump and you have to pay more at the grocery store to put food on the table, right? And rents are going up too. And so that would mean in this type of inflationary environment, there's less money for all the fun, entertainment, discretionary type things that we do because the basic necessities cost more. The other impact here would be that in a high inflationary environment, if we go back and look historically, the categories that do best from an underlying volume of sales perspective are the ones that saw lower price increases, right? So if like the price of the pump goes up 20%, and we'll buy the same amount of gas just because we got to get to work, the spending goes up, but the volume of consumption is zero. Like it stays the same, if not comes down just a little bit. But for categories that see lower levels of inflation, price increases of 1%, 2%, 3% or something like that, they see larger volume increases because we have a growing economy, population's increasing, incomes growing, all that sort of stuff. They see stronger gains because the within category inflationary pressures are lower than the overall economy. And so lottery specifically, the Oregon lottery, inflation within the Oregon lottery is 0%. There's no price pressures, right? You can still buy a dollar scratch ticket. We're not getting rid of those. You don't have to buy the 5 or the 10 or the 20. You can still buy the 1. You can still make the minimum bets. We're not raising the minimum bets on the VLTs or anything like that. So within the category, we can see zero, within the category of gaming, we can see zero cost increases. And so that would support a larger increase in spending because your dollar might not go as far at the grocery store, but it still goes the same amount at the VLT or something like that. And so there's a couple of impacts here that we haven't really settled on modeling or settled on exactly how those are feeding through into the forecast. We're kind of thinking about it and monitoring it. And we have some other changes that are going on besides just that when it comes to the, going out to sporting events and going out to eat to a greater degree and increased competition for the gaming or for the entertainment dollar, of which gaming is a portion of it. Like we have all these other things going on here, but specifically with how inflation is feeding through into lottery sales, those are just a couple of things we've been discussing in our forecast meetings with lottery and with other advisory groups. But I let off with this inflationary booms don't end well historically, and so we've started to model alternative scenarios in the last year. Instead of saying, what if the economy is a little bit better than we thought, or what if the economy is a little bit weaker than we thought, we kind of have these traditional alternative scenarios. We kind of scrapped that a year ago and we switched to a boom bust cycle because our baseline outlook, the most likely outcome for the economy is a continued expansion, right? It is not for a recession. Doesn't mean a recession is not coming, but if the economy doesn't continue to grow like we think it will, what is the most likely alternative path that the economy will take? Well, it's probably one of these boom bust scenarios that typically follow some of these high levels of inflation. And what are we talking about here? Well, there's a couple of things to keep in mind, a couple of things we can't answer today, but will impact whatever the cycle ends up looking like. One would be there's very little leverage in the economy. We know this. That household debt is very, very tame. We're not looking at a super severe recession because of those strong household finances, strong corporate balance sheets, and the like, right? There's not a lot of issues in the underlying economy that need to get wrung out in some sort of recessionary environment. And so that would point towards something more mild or moderate in the severity of the cycle. We know that part. The other part of the cycle severity probably has to do with how entrenched is inflation, right? inflation, the consumer price index is up about 8.5% in the last year. Are you going to your bosses next year and saying, I need a 9 or 10 or 11% wage increase so that I can get real gains on top of the inflationary pressures? I don't think we're at that point of in the overall economy. So that means that 8.5% inflation is not fully baked into the cake. It's not fully ingrained or entrenched in the overall economy. And so if it were fully entrenched in the economy, then we'd probably need a more severe recession to wring out those inflationary pressures to get back down to the Federal Reserve's 2% target. Some of that's probably ingrained. Longer term inflation expectations are starting to creep up a little bit based on some of the survey measures that the Federal Reserve cares about. And so a little bit of it is starting to become longer term entrenched in the economy, but so far probably not that much. And so that the level of how much inflation is entrenched in the economy probably will go a long way to determining how severe of a cycle we will ultimately see in the years ahead whenever that recession does come. In terms of the impact, we kind of modeled it as a moderate recession where we lose 4 or 5% of our jobs. The general fund's going to be down more because we're going to have some more volatile swings in the non-wage forms of income, with the stock market already being down 20-25% this year, and capital gains being so high last year, up 70%. That was going to come off anyway. It's going to come off further in a recession if we were to have one. And so a larger impact on the general fund in terms of consumer spending and income and things like that. You can see here our alternative scenario would be for a 4% reduction in video or lottery sales overall. That'd be the total, not just video, relative to the baseline. And we'll talk about in a minute. The baseline is relatively stable. And so we talk about a 4% hit to lottery in something like this. And you can see in the chart, it really has to do with the fact that we'd see some job losses, we'd see some asset market decline, things like that. But total current income wouldn't plunge like it had like in the Great Recession. Total current income kind of stabilized for a year or two. Relative to the baseline, which has some growth in it, it's stabilized. That's not unlike the 2001 recession. That's probably the closest companion in terms of the magnitude and the path that it would take. And if you think back to the 2001 recession, there's some job losses. There's job losses in high tech, but income was okay. Consumer spending was okay. Sales tax states did a lot better than income tax states back in 2001, 2003. Time period, video lottery or video sales. We didn't have line games at the time, but lottery sales held up and consumption overall held up. And so I think that's kind of the dynamic we're getting at, or we're thinking about today. Should some of these boom bust scenarios play out? Now, when it comes to gaming specifically, it's booming, right? As you guys know, as Kathy and Barry were talking about, and they've talked about in your recent meetings, sales are through the roof. We're seeing record levels of gaming sales essentially nationwide. And here we're looking at a high level gaming expenditures at the US as a share of income. And you can see we had the shutdowns with the initial stage of the pandemic, and then a really, really strong recovery. And it's really just showing that these record level of sales are just keeping pace with current incomes, not even factoring in that accumulated savings or those lower levels of debt or the rising asset markets. Gaming spending nationwide is all the way back, if not higher on a dollar basis, but as a share of income, it's just kind of keeping pace. And in fact, it's actually down just a little bit. It points towards an opportunity that we could see ongoing continued higher levels of sales than we anticipate, just because we're still not gaming quite as much as we did 3 or 4 or 5 years ago on an income adjusted basis. But we certainly in dollar terms we are, just not as a share of our budget. And so there's a little bit of upside room here, purely based upon this look in and of itself. So it's something to keep in mind that when it comes to the Oregon numbers, we are following trends, broadly speaking, that we're seeing elsewhere, and we're certainly seeing some regional divides too. This is something that we've been paying attention to a lot on the economic side of things, and it's kind of playing out certainly on the income and spending side of things at the state level or sub-state level. Here, what we're doing is we're taking Oregon and dividing it into 3 sections. There's the Portland region in gray lines. In this case, it'd be the 5-county region. So it's not just like the city of Portland, it's the Portland metro area, the Oregon portion of it. We have our secondary metro. So that's adding up all of the other metropolitan areas in the state. So that's Salem, Albany, Corvallis, Eugene, Grants Pass, Medford, and Bend, combined those counties. And then we have our rural Oregon, which would be all of the counties that are outside of these designated metropolitan statistical areas. We have video lottery sales on the left, employment on the right. So some factor of underlying economic stature versus some level of discretionary consumer spending. And broadly speaking, they tell the same sort of pattern in the big picture, where we know the Portland regional economy is lagging. Large metropolitan areas nationwide are lagging the recovery, and we're seeing lower levels of consumer spending. And a large part of that, a large part of the jobs hole and the little bit lower levels of discretionary consumer spending are tied to things that we stopped doing during the pandemic and haven't quite done as much anymore. And that's going out to eat, going into our urban cores for nightlife, going out to the bars, taking in shows, things like that. But it's also a lack of commuters. Fewer people are commuting into downtowns and urban cores and job centers more broadly across the state today than they were 2.5 years ago. We're working from home more. And so we have the income, we're spending it, we're going out to eat, but we're doing it in our suburban communities and not in the downtown urban cores like we used to, because we don't have to commute every day. And then the other one would be lack of business travel, where if you look at hotel occupancy rates, basically anywhere in the state, we're at record all-time highs. If you look on the coast or in Central Oregon or the Gorge, even in Southern Oregon, we're seeing really high occupancy numbers. So leisure travel's back, except in the urban core of Portland, those hotels are still seeing lower levels of occupancy and less RevPAR, revenue per available room. And a lot of it has to do with business travel and lack of conventions and all these sort of business activities that would happen in urban cores as well. That is also missing because business travel is not back, even though leisure travel is. And so that's impacting the Portland regional economy. That's going to be impacting the sales. Now, the last thing I would note here is that if we look, so that's the big picture. Like if we look in just the last year, job growth is strongest in Portland. We've added the most number of jobs in the Portland regional economy. Now they were trailing, they're just playing catch up. But as the large urban areas rebound at a faster rate today, because they had some of those barriers or some of those impediments to their growth, we haven't seen the discretionary consumer spending growth accelerate. The job growths are accelerating. The job growths are stronger, even as they started to slow in our rural communities. The job growth is slowing in rural Oregon, but they're still maintaining those higher levels of sales. And so that points to something else that's going on. Not entirely sure. It could just be changes in behavior. It could just be changes in we're not going downtown for shows and evening entertainment. And even though that would be certainly a big factor here, it could also just be changes in consumer attitudes and just the willingness to sit down. So if we look at open table data, so the number of people sitting down to eat at a restaurant where you use the open table software to reserve reserve tables, that's still down 40% in Portland. It's at a historic all-time high outside of Portland, but it's still down quite a bit in the urban core. So I think it's just a function of number of people venturing out in Portland is different than the number of people venturing out everywhere else in the state. But it's something we're continuing to monitor, is how we're linking underlying economic performance with some of the changes in consumption patterns and consumer spending and things like that. If we put it all together, our underlying economic outlook and the sales outlook, in this case for video lottery, it's higher today than it was pre-pandemic. Our underlying economy and the consumer spending and income numbers are higher than it was, but we're coming off of these record highs, right? We see these record level of sales in recent months, and we're starting to slow. We're slowing about as expected. If we look at the last 2 months of sales relative to the forecast that we just released, they're slowing. They're slowing maybe a little bit less than forecast, 2% or so less than anticipated for the last 6-7 weeks. But they're still slowing for a variety of reasons. We're coming off of our peak season. Other entertainment options are becoming more plentiful, or people are venturing out to a greater degree. I think we're starting to take airplane trips in greater numbers than we had in the last 2 years. So our entertainment dollars getting stretched, and we have increased competition for our time and our wallet. And some of us have to go into the office a little bit more than we did a year ago. And so all of these factors will slow some of this gaming expenditures, even though they're going to be higher than they used to be because of that underlying state of household finances. So what are the risks here? We're in this transition phase where we think we're going from these pandemic impacts of everything we've been talking about to something approaching more normal level of activity. But what are the risks? We have upside and downside risks here, right? We have income growth and spending can be faster than anticipated. We can have a growth in the player base. All of these things would support even higher levels of sales in the years ahead. And to the downside, maybe the inflation starts to crimp our budgets more, starts to bite into our ability to do these other things than we would like. And so therefore we have less money left over to go out to eat and to spend money on gaming. And then of course, as we transition off of these seasonal peak numbers and do other stuff with our time, some of these sales, the transition or the slowdown in sales can happen much faster than anticipated. Now, again, in the 7 weeks since the forecast came out or the forecast was developed, that hasn't been the case, but of course it could be the case in the months ahead as well. In the big picture, we're going to continue to see some growth in lottery resources. Today, we've seen a huge boom in revenues for 21-23 biennium, the one that we're just about, next week we'll be halfway through the current biennium. We've seen a big increase in that relative to expectations from a year ago when the budget was built. Lottery resources are up $140 million, 8% relative to the close of session forecast. I will say the general fund is up more than 8% relative to expectations a year ago, as we've seen some of those income numbers and those non-wage incomes among high income filers in particular are booming even more than expected. 23-25 resources, so next budget period that we're starting to develop, starting to think about as we're only a year out from that. They're relatively unchanged. You can see the height of those bars, they are relatively the same, a little bit of growth. We're talking just a handful of $1 million on net, because we're coming off of these peak highs today and we're transitioning down to something a little bit more sustainable, we think, in the years ahead. So that on net, that kind of leaves the biennium about the same amount of size, but still that biennium 23-25 is still 3.5% stronger than we thought pre-pandemic due to those overall changes in income and population and consumer spending patterns that we have seen. And with that, that's everything I had prepared as a high-level summary of the economic and revenue outlook. I'd be happy to take any questions if you have them now, and if not, I look forward to another update at a future meeting.
Thank you, Josh. Any questions or comments from the commission? Hearing none, thank you again. Great information. Barry, I did have a follow-up in listening to this. Just I'm thinking maybe a future meeting agenda item. I know that the lottery has done a tremendous amount of work on business continuity arising out of the pandemic. And at various meetings, we've talked about it, and we've talked about matters that have arisen during the pandemic. So this is sort of me more thinking through, follow up on that. Our budget today is about return to normal. Josh's presentation is about kind of a return to normal. I'm thinking it would be helpful at a future agenda to do just a few minutes on, I know we've done lessons learned, but I keep looking at this forecast and saying, this all looks wonderful. And yet, what if our pandemic predictions, what if something else, another situation like that? And I know we learned a lot about the reality of the business model for the lottery in our last pandemic. So I was wondering if at some point we could just come back and do a real quick look. These are 3 to 5 things that we learned arising out of the pandemic that we might be able to change and lessen or mitigate the impact in a new pandemic. And these are things that are the realities of, but how we will manage it from a business continuity perspective. I don't know if anyone else would find that helpful. And I certainly don't mean you haven't already done all that work. You have. I just thought it maybe a reminder to all of us would be helpful at a later date.
Certainly, we'd be happy to put something together and schedule that onto a later meeting.
Great. And I don't also know to what extent, I know that Commissioner Ramirez has just come on the commission. It might be helpful for him in particular, I was thinking. But will be helpful to me. I clearly I'd like to kind of have that summarized in a quick little package there. So thank you. Any other business that we should attend to? With that, this concludes today's meeting of the Oregon State Lottery Commission. The next meeting is scheduled on Friday, July 22nd. Thank you all for attending today's meeting, and the meeting is adjourned.
Thank you.
Thanks, everybody.
Thank you.